Everyone's told that US Treasuries are the world's safest, most liquid asset. Buy them, earn interest, cash out anytime. But here's the part they don't say out loud. For America's allies, Treasuries can be bought, and then you're told you can't sell. Let me show you the trap. The pitch was simple. Park your dollars in US Treasuries. You get a yield, and you get liquidity, the freedom to sell whenever you need cash. For decades, oil exporters and central banks bought in by the hundreds of billions. Then came the moment they actually needed that liquidity. Oil wouldn't ship, trade bills came due, and they went to sell their bonds for dollars, and Washington said no. Sell now, and you'd crash the market, so you're not allowed to. The most liquid asset on earth suddenly frozen. Okay, so they asked the Fed directly, give us dollars through a swap line, like you do for your own allies. The answer, no. You're not inside our dollar system. So, no sale and no loan either. Just a balance sheet full of paper you can't use. Here's the workaround America offers instead. Pledge those treasuries as collateral and borrow your own dollars back at a fee. Washington earns a spread to let you touch your own money. It's brilliant if you're the one holding the choke point. Step back and look at the size. Foreign investors hold roughly $9.4 trillion of US debt, about a quarter of the total. Japan alone sits on over $1.1 trillion. That's not investment, that's leverage, parked in someone else's currency. So the Gulf holders learned the lesson the hard way. Dollar wealth you can't exit isn't really wealth. The first move out is gold. Central banks are buying at record pace, and gold hit an all-time high above $5,600 an ounce in 2026. The second move is to reroute trade. China is the world's largest trading nation, over $6.5 trillion of goods in 2025. More of that settles in renminbi, and more surplus gets parked outside the dollar. But renminbi only works if you can actually use it, trade it, invest it, move it. That's where Hong Kong, China comes in. It's the offshore hub that turns RMB from a claim into a working currency. Inside Hong Kong, you get RMB trading counters. Buy stocks, buy bonds, buy gold, settle trade, all without touching a dollar. One place that solves liquidity, investment, and diversification at once. The plumbing for a post-dollar portfolio is already being built. This is what de-dollarization looks like up close. Not a declaration, but 1,000 quiet exits. National fortunes are decided by these long narratives, not by next week's headline. And Hong Kong's rising role is the clearest tell of where the current is flowing. So next time you hear treasuries are the safest asset, remember who gets to decide what safe means. Watch the exits, not just the entrance. I'm Alex. Thanks for watching.